Okay, guys, I'm going to show you how to use the TrendCloud day trading system. We've got the S&P mini up here, and what you're going to do is have three charts. The first chart, high time frame, 4-hour chart. The middle time frame, 1-hour chart. And then the low time frame 15-minute chart. So the highest time frame is going to be the time frame you use to understand the context of the trade. What is this thing actually doing? And on the high time frame, you're going to have the stochastic and the MACD on here. And these are the parameters that I want you to use, okay? 5, 3, and 2 on your stochastic, and also 20, 5, and 30 on your MACD. Don't worry about anything else, but this is free on TradingView, and that's what I want you to use. That's on the high time frame. The TrendCloud, you're going to put that on these two charts, the high time frame and the middle time frame. And you don't necessarily need it on the low time frame. So now, middle chart, we're also going to put a CCI indicator on there. And the CCI indicator, the length is going to be 20, and the source will be HLC3. And that is standard on TradingView. And you'll also have TrendCloud on there as well. This chart represents what's happening right now with trend and momentum. So the idea is we want to have the high time frame and the middle time frame going in the same direction. Green candles, cycling up, and momentum should be up as well. Here we don't have momentum up, it's kind of flat, right? But we have it here. So on the middle time frame, when that CCI line is above positive 100 or above positive 200, that means the trend is up and it's very strong. On the pullbacks into the TrendCloud, we don't want a CCI cross below negative 100. We want to see it go into that blue shaded area and then bounce back out. So we want to see this type of thing. So that's what you want to take a look for on that middle time frame. The low time frame is where we're going to actually look for the supply and demand zones. So drop base rally, rally base rally, that's what we're going to look for. You don't have to get fancy with it. You just draw it out like this. We'll make that green. And that is where you would wait for your pullback to continue long. On this pullback here into the demand zone, we want to see that the CCI indicator pulls back into this blue shaded area without breaking below, right? Without doing this. If it does this, all bets are off. We want it to do this and start bouncing out. That is going to give you the most powerful setups for your supply and demand zones. So let's look at one more. Here's a downtrend. So let's take a look at this area right here. I'll put a vertical axis line here. Okay, so here we've got a downtrend on the high time frame, and we want to rejoin that downtrend. Well, here's TrendCloud right here starting to cycle down, and momentum is still up, right? But right here is where we have cycling down, momentum is down, and look at this, TrendCloud is starting to go sideways, and right here, see that little crossover right here? It crosses over to the downside, it breaks below negative 100, and what does it do? It pulls back into that blue shaded area, okay? That's where you'd be looking for your supply zones. And what does it do? It pulls back, okay, basically into this consolidation area. All right, let's look for another one. Pulls down, it's going to come back somewhere inside the TrendCloud, right? We have not broken above positive 100. And what does it do? It pulls back into the TrendCloud. Look left, structure leaves clues. What do we have? Right here. So as long as you pull back into the TrendCloud and it does not break above positive 100 on a downtrend, right, then you're safe to take the trade. And the last thing is, whenever you see the candles turn blue, that means the trend is extended. So When the candles become extended, you might not want to continue going long. You want to be cautious. And if you do go long, you're going to manage the trade with a tight stop, because anytime you have an extended trend, it wants to come down and recalculate. So come down, recalculate, make the move up, or maybe it wants to come down and go sideways for a while, or come down, recalculate, and break to the downside. Those are always your three choices. All right, guys? So that's how you use your TrendCloud on your charts, and you can apply this to any strategy that you like. Moving average crossovers, you can use the opening range. We love using the opening range breakout tool in the morning, okay? So you can add it to any strategy that you like. Thanks, guys. I'll see you in the next video.